Good morning, traders. This is our weekly market preview and analyses for the week of September the 26th, 2022. This week's going to be a little different in our market analyses and trading update. I'm not going to go through our trading strategies for this week because number one, we're going to do a 0 DTE every single day. Number two, I'm getting this out a day late, getting back from a little bit of a recon mission for our first mastermind that we should be holding in May of next year in Cabo San Lucas. And because of that, you guys already kind of know what we're working on in the trading room. But I did want to give you some overview on what I'm looking at in the marketplace. And I think you can see there's a little bit of push and pull here. I think there's some impetus for some upside here in the short term, but the long term, again, just looking pretty darn bearish overall. If we look at the weekly technical indicator matrix that we like to use, you can pretty much see all across the board that it is still in sell mode. That very important pivot point that we look at on a weekly basis now moving down below 37.50, and that 37.50 level has been a very big demarcation point for me. And again, as long as we're down below that, we're in sell mode. So that's where we're at in the marketplace. It is interesting if you look at key support and resistance areas with our Fibonacci numbers and our order flow and our point of control and our VWAP and all of that added in. Looks pretty darn bearish at this point. A lot of people have asked me, where do I think the bottom of the market is? And one of the mantras that we have in our program is we try to react, don't predict. Nobody knows where the bottom of the market is. But I will give you what you are paying, or I will give you the value that you are paying for with this video. How's that? 32.50 is where I would see potentially a bottom of this market. I know that that is almost 500 points below where we're at right now. I don't have a longer term chart in delineating why that 32.50 level is sort of interesting for me on a chart pattern, and on, I will say, if you look at it from a PE ratio and a Sharp or just an overall valuation ratio, that 32.50 level is an interesting level. And the other thing that I do find, I guess, a little bit of comfort in with picking that number is that there are three pretty, I think, strong market technicians that over time have been pretty darn accurate at predicting tops and bottoms of markets. And they kind of all are somewhere around, very close or to around that same number. So if it's 32.50 and we're at 3,700 now, we do have some potential pain still to the downside. Pain, I guess, if you are a long investor. We love it in our trading room. The market going down has just been fabulous for us, and we would hope that that continues. Gives us a bigger vector of a move, which gives us better IV, which gives us better premium, which is primarily theta. Sellers we love. But anyway, we are sitting at an obviously a very, very big cliff here. And if we fall off that cliff, there's not a lot of support levels down below that there. However, I will say that I think we are due for a little bit of a bounce. Monthly sector rotation. We are working a healthcare trade right now on a reversion to the mean setup inside of our trading room. That's been cash flowing fairly well. We're actually going to add to that a little bit today, which is Tuesday, by the way, that I'm getting this out to you guys, getting it out a couple days late. Heat maps, this is 2 weeks ago. This is last week. Not a whole lot of change. Again, healthcare has been a strength area for me, continues to sort of be a standout. I know that doesn't look like much of a standout, but when you got a sea of red around you, that is an area that, again, I still continue to like. And we do have a trade in our trading room that does reflect that setup. From last week to, from 2 weeks ago to last week, the numbers just continue to look really, really ugly. The Russell has just been hammered, down 11% in 2 weeks. That's a pretty big move, and we've got a pretty big trade on right now in our trading room, working the Russell here. That's where we're finding a lot of premium right now. That trade is still working. We put it on last week, and we rolled it at least once that I know of, using the RUT rather than the IWM. But it's got great premium in it. But yeah, the bloodbath has been pretty substantial over the last 2 weeks. You know, one of the things, and again, I want to show you some charts and some indicators here, and I think it's important to delineate between what could potentially be happening here short term, and by short term, I mean today, Tuesday, or Wednesday, or Thursday of this week, versus over a month-over-month basis, a year-over-year, a quarterly-over-quarterly type basis. I think you're going to see a little bit of bifurcation here in some of the indicators that we look at, where A, I think we are due for a bounce to the upside, but B, the overall trend is still down. Now, this is one of those. This is the put-call ratio, and usually when the put-call ratio is above 1, meaning the put volume exceeds call volume, or whether it's below 1 when call volume exceeds put volume, it's just a way to figure out where the market is at. And it's a way to gauge market sentiment. So the market is sort of deemed excessively bearish when these levels are high, and excessively bullish when the levels are low. So again, that 1 number is sort of the demarcation point. Well, it's interesting that last week, our put-call ratio was pretty darn high. It was at 1.2. We've really backed it down this past week, back down to below 1 at 0.94. And that does mean, I think, that we are starting to see an ever so slight amount of capitulation here. Not too much, but it is interesting that we're pulling back here just as the fear index is actually starting to spike a little bit more. Now, last week's expected move in the S&P was 117 points. This week, we're looking at 123. That's awesome for us. That's exactly what we're looking for. Anything above 120 point move, you know we're going to have a really good shot every single day of the week at some pretty good premium. And we certainly saw that yesterday, bringing in almost $2,600 in profit off of $15,000 in capital on 2 different 0 DTE iterations. One on the SPX first, brought in about $600 there, and then another one later in the day on the NDX, brought in about $2,000. It's going to be tough to get those kinds of returns and get that kind of rich premium if you don't have this kind of an expected move. So again, the more volatile the market is, the more we love it as traders. Now, one of the things that I wanted to mention is looking at the SPX volume heat map. Last week was obviously up in this area right here, and I noted, well, look, we're at a consolidation area right in here. Seems to be holding right in here, but the problem is that we had this big vacuum right in here where we just simply didn't have a lot of really solid support areas. Well, that vacuum did its job. It basically put the market into a free fall. But guess what? We're finding some support areas now. We're finding some volume and some activity down in here. And that's one of the reasons that as I look at this market here, I do think that we are due for a little bounce, even though I think the overall trend is down. Talked for a moment ago about the Fear Greed Sentiment Index. It is a contrarian indicator. In other words, you know, when there is blood running in the streets, that's when you want to be buying. And when everybody in the world is making a ton of money off of just buying and holding stocks, that's probably the time you want to be heading for the exits. Well, we're there. We have not been in the extreme area for quite a while. We are just dipping now, you can see, into the extreme area. We were up in the fear area 1 week ago. 1 month ago, we were in neutral, and it's been about a year since we've really been in this extreme area. And that is a contrarian indicator once again. So it does maybe potentially imply that we've got a short-term bottom here, and we might be looking for a little bounce. Now, I want to show you some charts that I think are interesting. We have had 5 down days in a row here. Does this mean that we're looking to have a pop to the upside? Well, the last time we have had 5 down days in a row was on June 2nd. And that's the only other time that it has happened, was right in here. This is the only other time this year that we have had 5 down days in a row. And it did ultimately lead to a little bit of a pop to the upside. Hard to know at this point if that's going to continue, but generally, really decisive moves, whether it is a down move like this, an up move like this, or a down move like this, they don't usually continue without some form of a snapback taking place somewhere in there. And again, I do feel like we are in a very solidified overall bear trend, but that we are also due for a little bit of a short covering rally, a little bit of a pop to the upside. Another interesting thing, though, if you look at the bond market, boy, the bonds really, they're the canary in the coal mine. They are the first tell that, in many instances, will lead us to understand where the stock market, where the equities are going. And let's just put it this way. The U.S. bond market is ugly. Bloomberg's liquidity measure basically says that we have not been this bad on, we had a little aberration there. We had a little aberration there during the pandemic, but it didn't last for very long, and it was clearly tied to the pandemic and the shutting down of the economy. If you remove that portion right there of this chart, we have not had liquidity this bad in over 12 years. It's not a good sign, folks. It's not a good sign. It does not hold a lot of hope for our near-term future here when you look at the bond market. Now, the other thing that's interesting as well, though, maybe to look at the other side of the coin, is that right now only 3% of all of the S&P 500 stocks are above their 50-day moving average. When that happens, and it doesn't happen very often, but when it happens, that usually implies that we have found a short-term bottom and that we're looking for a little bit of a move to the upside. So you can take that for what it's worth. But the other thing that I have really been harping about is the VIX. The VIX, to me, folks, the VIX is absolutely broken. It is just absolute. But there has been no movement in the as this downturn has taken place this year. The VIX has basically gone the opposite way that you would think it should go. It should have been going up. Instead, it's been going down. There's no movement there. No bear market in the history of the stock market has bottomed out without the VIX first hitting 45. That's way up here. That's way up here. So something here with this is the market. This is the VIX. Something here has to give. One of these two has to make a move, okay? Now, the other thing, too, is I'm a big follower and a big believer in the McLaren oscillator. The McLaren oscillator, I think, has some tremendous accuracy in it. And the McClellan oscillator right now is signaling that the stock market right here where we're at today is the most oversold it's been in all of 2022. Now, once again, that doesn't necessarily mean that the market can't get more oversold. But when we talk about snapback rallies and the risk of a snapback rally, we're getting closer and closer and closer to that, I think, becoming a reality. Again, S&P could shoot up 170 points in one day here. Doesn't mean that we've changed from a bear market to a bull market. It just means that we were due a little bit of a snapback. Now, the other thing that I think stress and try to understand why it's not getting more attention is a research study that was put out by Bank of America's Global Research Department in the IMF, numbers that come from the IMF. You know, inflation is the big bugaboo of the stock market, and our inflation right now is really, really bad. That's a technical term. It's really, really bad. But one of the things that we have found through this information is that in modern economies, not third world countries, but in modern countries, when inflation gets up above 5%, it usually takes about 10 years on average to get that number back down to 2%. So if we think that the Fed is going, first of all, if you think the Fed's going to fix anything, you haven't been a study of what the Fed has been doing lately, because to me, they're just absolutely, completely off the rails. But if you think that the Fed is going to take us from where we are to that target 2% inflation rate that is the sweet spot, quote unquote, in the next 6 months, the next year, the next 2 years, I think we've got another thing coming. And this to me right here, this to me is the biggest headwind that the market is going to have going forward. At least that's how I see it. Now, here's another interesting thing I think that maybe poses the question of, are we ready here for a snapback rally? Retail put buying is absolutely gone through the roof. Just absolutely gone through the roof. Now, this is used for hedges, right? If you're buying puts, it's because you think stuff's going down. This is a contrarian indicator. What the retail market does, that's a contrarian indicator. And so there may very well be no better indicator than to see what the general public is doing and then do the opposite of them. So again, this might be an indicator that we are due for a snapback rally. But the last thing I think that I'll leave you here chart-wise is a piece that Charlie Bailello, I hope I pronounce his last name right. He puts out a lot of great information. He's a good follow on Twitter as well. But he's this chart right here shows that, you know, we're down about 22.5%. For the first 183 trading days this year. And that is the 5th worst start to the stock market in its entire history. Now, you can see the top 15 worst starts to the market for the first 183 days, and then how they ultimately ended up at the end of the year. But I don't think it bodes very well for this market if you're hoping that things are going to turn around here for this year. So again, it's making sure that you're in the right place at the right time. We have an investing program that has absolutely just killed it this year, the AST program, and it's pretty awesome. It's pretty awesome to be down 22% in the marketplace, and we're just absolutely killing it in AST. But anyway, let's go through our updated performance results. We do have an update here to our 0 DTE results. 117 trading days. We've taken 179 trades. 173 have been winners. We booked another loser last Friday. I hate that. I hate that. We still got an amazing track record. And we were able to hold the losses pretty tight. And so I didn't quite make all of those losses back here on Monday of this week, but I was really, really close. I was $200 away from getting all of those losses back. So if you only need one trade to make up a loss, it's not too big of a deal. But it's a bummer. I don't like seeing those losses coming into play. We sat at 2 losses on the year for a really, really long time. And then we had, I think, 2 or 3 right in a row. And that number hurts. I take a lot of pride in this number, but overall still, I think we have probably the best track record for 0 DTE trading anywhere on the internet. I'm really proud of that. Those of you that are members, remember to use the private video link in our Discord chat room. You just go to the very top of Discord, you hit the pin, drop down window will come down, and you can watch a video of every single one of our Zoom sessions. They're all recorded for you there to watch. Okay. In addition to our 0 DTE, obviously we have our 4 DTEs. Had a couple more. Had with the struggle that we had with our 0 DTE on Friday. Man, our 4 DTEs last week just kicked butt. Just some amazing returns. Well above what our average returns on those are. So both our SPY and our Q ended up nicely profitable for us last week. 113 wins, 7 losses. Our IWM credit strangle, it worked out for us on one side of the trade. We've done 37, had 37 opportunities, done 40 trades. There's been a couple of weeks when we've doubled up and or double dipped rather. And we've had 39 winners, no losers. We do have one open right now. We rolled our put leg from last week to this week, and we're still working that today. It's got a Wednesday expiration this week. So it looks solid. It looks really good. But yeah, I would love to have 40 winners, 0 losers on the year. I really do have sort of a personal goal to get us through the end of the year here with not one single loss in this strategy. We call it the Millionaire Maker strategy. $12,000 in on the trade over 9 years. On our current run rate, our current year-to-date performance, that'd turn your $12,000 into $1 million. No guarantees, but that's the run rate that we're on right now. Pairs trades, we haven't taken any of those off. We are going to be working on those today, Tuesday, which is the 27th, by the way. We will be working on booking profit on at least one of those, I believe, and then ratioing the other 2. Bear market trades, didn't add any to that category this week. We did add a positive Vega trade. There's still 3 of those working right now, but they're all in the profit zone right now. If we do get a loser in there, of course, I'll update that. But right now, we're 6-0 on those so far this year. That's been an amazing trade too. This is a trade that gives us the potential to make almost 10% a month, 120% a year. And it's a trade that you almost don't need to watch. All of the volatility that we've had, man, it just kind of clicks along, does its own thing. Tuesdays and Thursdays, we try to make butterflies a focus of our 0 DTE. Now, again, one of the things that I'll say if you are into trading butterflies on 0 DTEs, we have never, ever lost a single penny of our principal in any 0 DTE butterfly. We never will. We never will. Because we don't put any of our principal into these. We pull our profits from our standard approach of 0 DTEs, and then we take a little bit of that profit and put it into those. So for example, yesterday had about $2,600 of profit on the day. I took 150 of that. I put it in a butterfly. Guess what? Didn't work. But I didn't put any principal in it. I only put profit. The only thing we can lose in our butterfly setups is profit. So we love that approach. Makes a lot of sense to me. We've had 36 winners on the Tuesday, Thursday 0 DTE sessions, 1 loser. Scalping results. Tuesday of last week, I was on an airplane, so didn't do any scalping on Tuesday. Thursday was just a brilliant result. Wasn't brilliant trading. I was sitting on my laptop by a swimming pool overlooking the ocean. It was great, but I didn't have a lot of my tools with me. I didn't have my footprint charts or my market profile information or a lot of the tools that we use to track volume and directional bias, but it seemed to work out okay. So $5,400 profit on Thursday scalping. Dragonflies, we do have a dragonfly going on right now. We'll still classify it as a dragonfly, even though we have taken profit on the put dragonfly portion of the trade. The trade itself is still working and open. That's with the Russell, the RUT. So we've had 4 total trades, 3 winners, still have the Russell open and working. SSO, we'll update you that, I think probably on a quarterly basis. And then our overnight ES trade, oh my goodness, this has just been fabulous, just absolutely fabulous. Now, we cut down last week. There were 2 days last week. Usually we do this every single day. Sometimes we do it 6 days a week. Sometimes we'll enter one on Sunday as well. But we cut down to took 2 days out of the schedule last week. That proved to be a very smart move, where we had some really big overnight moves that kind of threw the trade, would have thrown the trades into a awry. But this trade has just been amazing. We call it the Theta Fairy trade. You put the trade on, you set your take profit, you go to bed. You should wake up, if it works, you should wake up in the morning with $100 under your pillow. And it has just been phenomenal. 24 winners out of 25 trades. Again, the average profit on each one of these is $100. Our one losing trade that we had was $168 loss. So not a big deal. Took 2 days to move right back in, to recover that and get right back into the profit zone. That's an awesome trade. Really love that trade. Our gold ladder, we did add a gold ladder to our overall positions with the gold trade. There are still some of those working. Obviously, there always will be some open and working. But so far, knock on wood, we haven't had a single loser there in the gold category. Same thing with our oil ladder. We've added 5 trades to that whole mix. And we do still have some oil trades working in the ladder as well. In all of our ladder trades, we're always going to have something open and working. We're never going to be completely out of that trade. That's the nature of a ladder. But so far, man, they have just been fantastic. And it's rare to be able to get a trade setup that has the probabilities of success and the ROI of oil. Although I will say on the gold trade, you know, with the IWM trade, we call it the millionaire maker trade. $12,000 over 9 years could turn into $1 million if you can keep the potential roll rate working at the level that we are at right now. Well, the gold ladder is about 50% higher income potential than the IWM. Well, what does that mean? 50% more. What does that mean? Well, if you took the same $12,000 and put it at this run rate over 9 years, instead of $1 million, you have $10 million. So again, no guarantees. You can't make projections like that because you know they're never going to come true. That your numbers will be better or worse. They'll never be exactly the same. But man, the potential is just huge on all of these trades. Our asymmetric trading system. You know, we kind of had a tough week last week, but we are still really well positioned here. And, you know, it's interesting. I think that last week was probably the first week of this entire year where our volatility matched the market's volatility. We were, you know, when the market was up 1% or down 1%, we were tracking right with it at 1%. That's pretty rare. We usually come in about 50% to 70% less risk. But we are well positioned in that program. Again, as the market continues to sell off, we continue to just perform like crazy. And we continue to widen this margin. We continue to outperform the market by more and more and more. And so it would be lovely if we could get this to a nice round number of about 50%, doing better than the market by 50%. I would love to see that. So that's our overview for the market, guys, this week. Those of you that are interested in taking a peek at either our investing program, the AST program, or our live trading room can get a free preview, a free trial to do that. The live trading room is good for experienced traders that are serious. I'm going to add that component, that are serious. Had 4 people sign up for our trading room trial in the last week and cancel within 2 days. They hadn't done any of the work. We have 3 hours of training even before you get into the trading room. And they had, I can tell on my end, they hadn't even touched it. And I said, what's going on? They said, yeah, this is a little bit more than I was expecting. We're looking for serious traders. Traders that need a system, need a business plan, need a mentor, need higher level strategies, want to take their trading to another level. Maybe they're in a program that all they're getting is a 0 DTE, and they know that that's not enough to have a full complement of what a professional trader would do. If you all are also in a trading room right now, you're in a Discord room, and they're not giving you transparency. They're not showing you a documented, time-stamped record of every trade that they're doing. They're not giving you a link to all of their recorded video playbacks of their live trading sessions. They don't give you free one-on-one strategy sessions. They don't give you unlimited contact where you can talk all day long. They're not giving you their levels, their biases, like I did with you just here in this video, kind of giving you an idea of where the market is potentially going. If they're not giving you 22 different trading strategies beyond 0 DTE, look, we made $2,600 yesterday with our 0 DTE. It's awesome, but it shouldn't be a one-trick pony. You should be doing a whole lot more diversification than just that. So if you're in a trading room and that's all they give you is 0 DT, you're not getting value for what you're paying. Dynamic versus static 0 DTEs. I think that our track record of 173 winners and only 6 losers, if we would have just used a hard stop loss, these 173 winners would probably be closer to 80 winners. But we do, in fact, trade dynamically, and we adjust our trades as the day goes by, and that's why I think we have this amazing track record. This is a big one right here. 0 DT setups with at least $1,000 daily profit potential. There's no guarantees in the market. We can't give them to you. Nobody should. It's against the law. Never know what the result is going to be at the end of the day. But I said this to our group last Friday when we ended up at a loss. I said, look, I don't know what the day is going to bring, but I know it's going to be a great potential day. And it's up to us to trade it correctly. And there was enough profit there for us. I just didn't execute as well as I could have or should have. But I will tell you this, I will guarantee you this. Every single day we put on a 0 DTE, there is a potential for $1,000 or greater profit in there. It's just up to you and I to see if we can extract it. But if you're trading butterflies again or something that just simply doesn't give you that potential on a daily basis, and you really want to make this something substantive in your life, might be time to change your approach. And lastly, we do have a 200% double your money back guarantee. You get into the program, you like it, you sign up for your first month, and at the end of the month, you don't think it's the most amazing trading room you've ever seen, and you follow all of the steps we ask you to, I'll give you double your money back. So there's not a big barrier here. Our AST program is good for investors, not traders. It's good for somebody that's tired of excessive risk. It's for someone that's impressed with our results. It's for someone that says, I would love to be up almost 20% this year on my rate of return with the market being down 22%. That sounds good to me. So anyway, those are our 2 primary programs. I will drop a link in the description box below. If you want to take a free trial of either of these programs, let me know, guys. I will see you all in the trading room here in 2 hours. Take care. Have a great rest of your trading week and have a great day today, guys.